according to the double entry system of accounting, every transaction of business has two aspects. Two aspects. Every transaction has two aspects. Okay, what are those aspects? One debit aspect, one credit aspect. Okay, two aspects. Double-edged sword, right? Two-edged sword. Okay, it can cut this side and it can cut this side, both the sides. Both the sides, you can cut this way, you can cut this way. Okay, anyway, that's called double-edged sword. A double entry system has two aspects, one debit aspect, one credit aspect. Okay, one receiving aspect, okay, which is a debit aspect, and one giving aspect, which is a credit aspect. Okay, so one is a debit aspect, another one is a credit aspect. Right. In light of this, the three types of transactions, there may be 10,500 transactions in a business organization. All those 10,500 transactions should be, listen, ma, take my word for granted, should be put into any of these three types of accounts: personal account, real account, and nominal account. Personal account, real account, and nominal account, all 10,500. 1,56,500 transactions also have to be put into these three types only. Right? These three types only. Right. So personal account is account related to people, persons, legal, artificial, representative, or maybe natural person. Real account, real assets, accounts related to assets. Nominal account, account related to expenses and gains, expenses and incomes, losses and gains. Okay, the rule for real account, a personal account, can you please tell me? You can see it there. Rule for personal account. What is the rule for personal account?
Debit the receiver,
Debit the
credit the
receiver,
giver.
credit the giver.
Very good. Next, real account.
Debit what
Debit
comes
what
in,
comes in, credit what goes out.
Nominal account.
Debit all expenses and losses, credit all incomes and gains.
Okay. Now, in light of this, all this discussion can be seen in this simple chart, flow chart. Okay. Personal account, rule for personal account: debit the receiver, credit the giver. Real account: debit what comes in, credit what goes out. Nominal account: debit all expenses, credit all incomes. Okay, so this is the crux of this chart, is the crux of, okay, the entire paragraphs given above. Okay, now yeah, you can take a screenshot of this one, this one. This will be useful to you later on when you get any doubt. Okay, and Ravi sir is not available. Ravi sir is not available to you and you have a doubt. What do you do? What will you do? What do you do?
We'll call you.
Ravi sir is not available. He is not even reachable to the phone. Okay, he is not responding to the WhatsApp also. He may be somewhere busy taking class or training program, or sitting in TV channels and discussing something. So he is not taking call. What to do? And you have very less time to write the exam. What will you do? You need some assistance. So for that purpose, this sheet will be useful to you. Okay. Now I will take Jahnavi to Ayub. Yeah, Ayub. Jahnavi will take, okay, transaction 1. What we'll do is, okay, we'll take each transaction and analyze it. Right? What you have to do is, what are the aspects in this transaction 1, Jahnavi? What are the aspects in transaction 1? Every transaction has two aspects, one debit aspect, one credit aspect.
Credit.
Okay. Now, what to do, whether to debit or credit, we'll decide it later on. If there's debit, there should be a credit. If there's a credit, there should be a debit. If there's a giver, there should be a receiver. We'll decide it later. But what are those aspects? What is the debit aspect in salary paid? What is the credit aspect in salary paid? Yeah, Jahnavi.
Cash account debit to salaries account. It's
Cash,
debit.
yeah, there are no. I'm just asking what are the accounts involved or aspects involved. Accounts
Debit
involved are just cash, okay, and salary.
salary.
Okay, salary. Cash, what is happening to the cash? When salary is paid, what happens
Cash
to the
going
cash?
out.
Cash
Out.
Going out. Cash going out.
goes out. So cash, what is cash? Asset. Asset related account is real account. Can you see
Real
my
account.
cursor? Can you see my cursor?
Yes, sir.
Yes, sir.
Okay. So it is salary account, asset related account, salary account, right? And what's happening to, I'm sorry, asset related account is real account, sorry. What's happening to that real account or what's happening to that cash? It is going out. When it is going out, then it has to be credited. It has to be credited. Okay. Then there is a salary aspect for the same transaction. What is salary? Expense for the company. Okay. Now all the expenses and incomes come under nominal.
Nominal account.
What's the rule for nominal account? Debit all expenses, credit
And
all
loss.
incomes. Since it is an expense, we debit it. We debit it. Okay, we debit it. Salary account debit to cash account. Okay, next. I ask Archana. Is it Archana? Yeah, can you please take up the next transaction? Interest received. Interest received. Archana. Is it Archana? Is that nobody, Archana? Or did I take?
No, sir.
Achut. Okay, Aditya will take. Aditya.
Yes, sir.
Yeah. Interest.
Which one, sir?
What are the aspects involved here? What are the aspects involved in the second transaction? Interest received. Interest received. Okay. Now look at this, ma. When you are attempting, I don't expect 100% correct answer. Why I'm asking is, if you don't know, I'm here to correct you, right? So don't worry, right, wrong, nothing. You just speak out. Okay, go ahead, Aditya. Even if it is wrong, speak.
Oh, so what should interest
What
received?
are the aspects in this? Identify first the accounts or aspects. Two aspects now. What is number one? What is number two?
Debit and credit.
No, what is that? What is the debit aspect here in transaction two?
Expenses and loss.
What is that expense?
Expenses.
No, ma. Interest received is the situation, is a transaction. Every transaction has one debit aspect, one credit aspect. In interest received, what is the debit aspect? What is the credit aspect? That's the question. Interest is expense. Okay? Interest is expense.
Okay.
And when it is, I'm sorry, interest is received now. Okay, when it is received, it is income. If it is paid, it is expense. So it is received. It is income. So interest income. When it is income, it comes to Okay, it comes to nominal account.
Normal. Okay, nominal.
Normal name.
Nominal.
Nominal account. Okay, so it is an income. It is an income. So therefore, it is to be credited. Interest income. Now, interest also will be paid. Okay, that's an expense. Then it will be debited. Interest paid is debited. Interest received is credited. Okay, be careful. Be careful. Now, in this problem, interest received. In another problem, it may be paid. There, don't take it for granted. It is to be credited. Interest means it is to be credited. No, it can be debited also. Right. When it is received, how it is received? It is received in the form of cash. When it is received in the form of cash, what is that cash? It is an asset. When it is an asset, what is the account related to asset? What is the account related to asset?
Real account.
Real account, simple. Real account. And what's the rule of real account? Debit what comes in, credit what goes out.
What was
When
it?
you receive cash, it is coming in. It is coming in. So therefore, debit. Cash account is debited. Interest account is credited. Interest account is the giver of the benefit. Cash account is the receiver of the benefit. Whether it is personal, real, or nominal account, please take it for granted. The account which is giving benefit, okay, and the account taking benefit. Account giving benefit will be credited. Account to taking benefit will be debited. The debit is always in the first line and the credit is always in the second line. The account which is taking benefit to be debited, the account the account which is taking benefit to be debited, account which is giving benefit to be credited. Okay, clear? Any confusion? Any confusion? Yeah, right. So this is Aditya. Next is Likhita. Yeah, you can mute yourself, Aditya. Next, Likhita.
Yes, sir.
Third
Machinery
one,
account
machinery
debit to
purchase.
cash. Machinery account debit to cash. Machinery is the debit aspect and
Two
cash is the credit
aspects.
aspect.
Machinery is one aspect. Okay. Cash is another aspect. Both of them are assets. The assets related accounts are real account. Real account. Okay. Real account. And the rule for real account, debit what comes in, credit what goes out. Machinery is purchase, it is coming in, debited. Machinery account is debited. What is going out? When you buy the machinery, you will pay. When you pay,
Cash.
you have to credit. Cash goes out, you have to credit it. Right? Good. Next, Malik Khan.
Yes, sir.
Yeah, please. Next transaction.
Building sold. So building is an
sold.
asset.
Nothing is mentioned. Building sold means
Credit.
it is implied that it is for cash. Okay. If it is for credit, then the name of the person will be there. If it is for credit, the name of the person will appear there. If nothing is appearing, means it is implied that it is for cash. Okay.
Yes.
Right.
Yes.
So building, what is
So building is an asset.
Asset.
Real
And
account.
sold for cash. Cash is an asset.
Cash is
Both
an
of them
asset.
are assets. Okay.
Yeah.
Right. And the asset related accounts are real accounts.
Real account.
Real accounts. Okay. Real accounts.
So
Debit what comes in? What is coming
cash is
in?
coming in.
Cash is
Cash.
coming in. Debit cash account. Cash account debit.
Cash
to
account debit to building account.
Building
Credit.
is going out. So therefore credit. You will ask me, sir, how the building goes out? Where the building goes? It will be there only. No, it goes out of your company records. The ownership will be going out from your hand to the person who is buying that building. Okay. It will not appear in your books anymore. That is called going out. Okay. Next. Next is Maria. Maria will take next transaction.
Yes, sir. Outstanding salary.
Maria, your commerce or non-commerce?
Commerce, sir.
Okay, good. Go ahead.
Salary account debit.
Salary account is one aspect. Please analyze first. You have this exercise, and later on you will not have any problem when you're journalizing or preparing ledger accounts. Okay, analyze it. Salary is one aspect. What is the another aspect? What is
Cash.
outstanding salary?
Outstanding salary.
It is not like first one salary paid.
Yes, sir.
It is
Yes, sir.
outstanding.
Outstanding salary.
So salary is one aspect. Agreed, accepted. What is the second aspect?
Salary.
Even if it is wrong, don't worry. If it's wrong, I will
Outstanding
correct.
salary. Outstanding salary.
Very good. Outstanding salary is another aspect. Okay. Salary is an expense. When it is an expense, nominal account. Then what is this outstanding salary? Now, outstanding salary means the salary has become due, but you did not make the payment. That's called outstanding salary. Okay. So it is to be paid to the employees. There are so many people in the company, and for so many people, you can't go on writing all those names. Instead of writing all those people's names, okay, when it has become due, salary account debit, when you're paying to cash, when you're paying, salary account debit to cash. When you're not paying, when it is outstanding, salary account debit to the name of the person to whom you're paying. So since the employees are so many and it becomes voluminous, you will write simply outstanding salary. Outstanding salary. That means this amount is due to a person. If it is a person, then it relates to personal account, right? When it is a personal account, what's the rule for personal account? Debit the receiver, credit the giver. Account which is giving benefit is to be credited. The account which is taking benefit to be debited. Which account is taking benefit? Which account is taking benefit? Salary account. Okay. Okay. Then who is giving that benefit? The employee is giving that benefit. If the employee is allowing his salary to be with you, the company, the employee is giving benefit to the company. So outstanding salary account. Salary is an expense. Salary is an expense. Debit salary account. Okay. Outstanding salary is a personal account. He's giving the benefit. So credited. Right? Next.
Yes, sir.
Next. Very good. Next.
Sir, can you repeat points 3 and 4 once again?
3 and 4. Okay. Who's this?
Sabrinath, sir.
Okay. Yeah. So I'm sorry, 3 and 4. Machinery. What is machinery? Asset. One aspect is identified as asset. Another aspect is identified as cash. Right? There are two aspects for every transaction. Cash account is giving benefit. Machinery account is taking the benefit. One asset is coming in, machinery is coming in, cash is going out. Both of them are assets. Okay? Assets related accounts are known as real accounts. When they fall in this category of accounts, the rule applicable is debit what comes in, credit what goes out. Machinery is coming in, debit machinery account. Okay, cash is going out, credit cash account. So the entry will be machinery account debit to cash account.
Sir, then when we are purchasing machinery, it is also an expense, no, sir?
Right. In accounting, yeah, good question. In accounting, yeah. Guys, you have to clarify your doubts this way. You have to keep asking. when you're buying machinery, sir, this is also an expense. Now, look at this. When the expense incurred is for less than 12 months, that's called expense. When the expense incurred is for more than 12 months, the benefit of that expense is for more than 12 months, that's called asset. Okay, that's called asset. Look at this. When you buy the machine, you will use it for 10, 20 years. That is asset. It's asset. It's not expense. If salary is paid, it is for less than 12 months. Within monthly salary, we pay the expense. Okay, it is paid within 12 months. Got it? In accounting, you should know a concept called revenue and capital. The salary paid is revenue in nature. Now there may be a question also. What is the difference between revenue and capital? It is a revenue in nature. Okay, salary is revenue in nature, whereas machinery is capital in nature. Revenue and capital. When it is revenue, it goes to nominal. When it is capital, it goes to real account. It is an asset. Clear? Sabrina, clear?
Yes, sir. Yes, sir.
Okay, next. We'll go to Maria Isova. Pawan, Joel.
Yes, sir.
Yeah.
Sixth one, sir.
Hmm.
Received cash from Ramesh. Two accounts, sir. Cash account and Ramesh account.
Received cash from Ramesh. Two accounts. What are the two accounts?
Cash account and Ramesh account.
Cash account and Ramesh account. Beautiful. Okay, ma? Non-commerce
Yes,
cash.
sir.
Cash is one aspect, Ramesh is another aspect. Ramesh is the person, he's giving. When he's giving, credit the giver. When he's giving, credit the giver. Now, what is he giving? Cash is giving. Okay, receive from Ramesh. He's giving cash and we are receiving. Okay, when we receive, it comes in. It comes in. When it comes in, it has to be debited as per the real account rule. Okay, it is coming in, it has to be debited. Right? Next. Is that clear? Next, safe. Take up the next one. Safe.
Sir, proprietor introduced capital.
Proprietor introduced capital. Proprietor.
Sir, capital account and cash account.
Capital account and cash account. Very good. Capital account and cash account and capital account. Two aspects. Which account is debited? Which account is credited?
Sir, capital account is debited and cash account is credited.
Capital account is debited and cash account is
Credited, sir.
credited. Is cash going out so that you can credit it?
No, sir. Cash is coming in.
Cash is coming in. Therefore, what you said is wrong. Okay. And what you have to do,
Okay.
you have to debit it. You have to debit it. Okay, ma? Now, if this is to be debited, what is the next option? Credit. What is that to be credited? Capital account.
Sir, capital, yes.
Capital account. Why the capital account is to be credited? Okay, he is giving. Who is giving? The proprietor is giving. Who is the proprietor? Is a person. So therefore, the rule of personal account is credit the giver. Credit the giver. Okay, ma? When I'm correcting, please don't misunderstand, ma, because I had to correct. Otherwise, you will learn the mistake. Okay, but you must,
yes, sir.
Whether it is right or wrong, you must be. Yeah. Next is Brahmeshwar Reddy. Yeah, take the next one, ma.
Sir. Dividend received.
Dividend received.
Okay,
Dividend, that's an income.
Received.
Okay, dividend is an income. Okay, because this word is new for you. Okay, especially for those who are coming from non-commerce, this is a new word for you. It's an income generally received by companies. Okay, it is on shares. The profit on shares will be distributed as dividend. It's an income. For me also, I get dividends. That's an income. Okay. Dividend received by the company. Company also invests in shares and they get
Normal
dividend.
account.
Okay.
Sir.
What are the aspects? Two aspects. Dividend is one aspect. Okay.
And received is one aspect.
Receive. What you have received.
Cash.
Cash.
Cash received.
Cash.
Cash received. Okay. Cash is received. When it is received, it comes in. Okay.
What comes
Cash is
in?
coming in. Okay. Then what you will do? Debit what comes in. Debit what comes in. Okay. Debit cash account or cash account debit to something else to be
Received.
credited. What is to be credited?
Received.
Yeah. What is to be credited? Cash is received
Cash.
and it is debited. What next is to be done? It is to be credited.
Dividend.
What is that to be
Yes, sir.
credited?
Dividend.
Dividend is to be credited.
Dividend.
Dividend is to be credited. Why dividend is to be credited? Because it is an income. Because it is an income. Okay. Oh, that's the time is
Sir,
up.
time is
Time is up. No? We'll close it here. Because it is an income and it is to be credited. Right? It is to be credited. Right? So we'll stop here and we'll continue from here. And please do remind me. Okay, ma, we'll have some more exercises like this so that you will get complete grip over the concept of accounting.
Okay, sir.
Right, ma? Basics. Right. See you in the next.
Oh,
Good day.
okay, bye, sir.
Thank you.
Thank you, sir.
Thank you, sir.